Glory Day pre-market phase today is about structure, not prediction. Mark SPX and XPS high lows swap and liquidity.
All right, all right. I am showing that we are live and I am so happy. Praise God. It's been quite a challenge getting the live stream back up, and that we've succeeded. And so that's all good. I just want to give God thanks for waking us up this morning, and we're about to be exposed to the stock market, SPX, and market structure, and so many wonderful concepts, systems, and strategy, and one strategy. But I do want to give God thanks for our daily bread. You're going to gain knowledge, understanding, insight, and wisdom. It's going to grant us access to abundance. Seriously. Just want to refer to Luke chapter 10, that the scripture has been speaking to me. It's where I'm not going to quote it word for word, but it says that he is given little and does good with it will be given a lot. And, that's not giving the scripture justice, but the point is going into our development as traders. We have principles, and it's discipline based. So you got to have discipline. We're learning the discipline, but we need to stick to it. I'm reminding myself, as I always said, Kim told me yesterday, you always say stick to 25 to 30% profits. We had a loss this week, and it's because we didn't stick to the 25 to 30% rule. The SPX had granted us 40%. And we didn't close, and then the goal became 60%, and that's when it hit the VWAP line. I'm going to go ahead and, give you a quick little lesson of what the VWAP line is. It's the pink line on the screen. And as you can see, in this case, this is the ES 500. This is what we take a look at, the ES Futures 500. It trades 24 hours, London, Asia, and Europe, London and Asia markets. They're open when ours are closed. And so the ES Futures is still trading. It trades 23 hours a day, and it's a beast. So anyway, my Apple Pen doesn't, there it is. So the VWAP is the pink line right on our screen, right here, value weighted average price line. So price, in this case, it hit the VWAP. You see that big red candle? I call that a hit. And then price went up. In this case, it went down. This would have been so nice the other day. But in our case the other day, it went up and just kept going up, and up. And when it came down to the VWAP line, that was a great place to exit the trade. And essentially greed clouded our vision, and we didn't see that price was coming. We didn't see that, or just acknowledge that price can hit that VWAP line and bounce. And it doesn't always go through. In this case, it rode the VWAP line and then started to descend. Price started to go down. However, in our case, it hit the VWAP line and price started to go back up. Anyway, those are that's a principle, 25, 30%. We can get that all day, every day. So that's what we're going to be studying, is how to do that. And my approach is with market structure. I analyze the market structure. It's not very difficult to do. It's a practice. And there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 areas that I look at. And you don't have to have them memorized because we have what's called a smart money roadmap. I'll get to that in just a second. And we'll be breaking down the smart money roadmap, how to generate it. How do you get your own smart money roadmap? But before we do, I'm sharing this for informational purposes only. It is my own proprietary system, a result of my own research, and it's a strategy that I use in my own real account. While it's a principles-based strategy, the strategy is subject to change. By sharing my trading activities, it's not a solicitation for me to buy or sell securities for others. Trading does involve risk with possible loss of principal. Sharing my live trading sessions should not be construed as investment advice. It is me sharing my strategies with you and how I make money in the stock market. And sometimes, be honest, lose it. But the whole idea is to keep it. You're going to win more trades than you lose, which is what keeps me coming back, right? I win more trades than I lose. This is my job. I am what I call a professional day trader, and this is how I support myself. This is how I support my lifestyle. This is how I pay my bills. This is how I enjoy life. I really enjoy this. It's turned out to be a really good discipline for me. So with that being said, let's jump right into it. We've been kind of running out of time. What we're going to do is what we always do. We're going to take a picture of, this is not the EX. Sorry. I thought this was the EX. This is the SPX. This is one of the screens we use. I'm trying to get rid of that side business. Give me a second. I got side business over there. Oh, okay. I want this one. Oh, okay. Side business gone. All right. So this is officially the ES, E-mini S&P 500. S&P 500, top 500 companies in America for those of us that don't have much training experience. Top 500 companies in America. That means the big dogs, the top 500. In order to be on this list, you have to be in the top 500. And if you don't produce, then you will get bumped out of the top 500 and replaced by a company that is performing better than the previous one. Okay, so what we do in this case is we're going to use higher agency. That means we're going to use AI to help us develop our smart money roadmap. Okay, so you do need ChatGPT. You can use Gemini. You can use whatever AI you have available at the moment. What I do is I pay to have unlimited use of ChatGPT. I use it all day, every day, generating smart money roadmaps. So basically what's going to happen is it's going to do the technical analysis for me. I'm going to double check for accuracy, and then that is going to help me navigate the market structure for today. I'm going to do this now, and then I'm going to do this when the market opens and get, a more accurate read. because it's subject not to follow the roadmap that we generate right now. So why are we generating it right now? Well, to get an idea of, we just want an idea. We want a picture of what has happened with the ES futures. It is our pre-indicator for the SPX. It's the leader because it's trading right now. It is an S&P model, okay? And so is the SPX. It's an S&P model, SPX model. Or S&P 500 model. So this one's trading now. The SPX will try to catch up to it or pick up where it left off. All right. Okay, so with that being said, we'll take a screenshot of the ES futures right there if you don't have it up on your screen, on your laptop, go ahead and take a picture of mine. I'm going to leave it up for like a couple seconds. You need to grab your phone if you don't have it and literally aim it at my chart or whatever or if you're looking at it on your phone, just take a screenshot, right? You don't have to have your laptop open. You can do it from your phone. Take this screenshot. All right. That's a pretty good amount of time for you to have done that, right? I hope so. We'll come back if not, and you can do it then. Okay, so now that we've done that, we're going to go to the SPX. It's okay if you don't have your chart all set up like mine. It's okay. Just take the screenshot. All right, literally take the screenshot. Okay, so got the screenshot of both. Now I sent you notes in the text thread. You want to copy that. Not the report. I sent you like a long list of notes right underneath the vibe trading symbol. And literally just copy that. And now put all three, the futures, ES mini futures, the SPX screenshot, and the copy paste from the market structure notes, the cheat sheet I sent you. I called it a cheat sheet. And we're going to put that in ChatGPT. And this is going to generate our first smart money roadmap for the day. And yes. And what I'm going to do next is I am going to PDF it. Yeah, I'm going to turn this into a PDF, and then we're going to have a little bit of a lesson because I'm going to pick one thing. I'm going to pick one thing on the Smart Money Roadmap, and I'm going to elaborate on it. Okay, so that's the way we're going to do this every day. Is I'm going to pick one thing on the Smart Money Roadmap, and that will be our lesson for today, for the day. And eventually we'll get through all of them. And you know what? We'll just start back over because it's repetition. It's repetition. You know, I'm a personal trainer. We get in better shape by sets and reps, right? So this is, for some of us, our first set, and we're about to take our first rep. Okay, so now do I have this? Looks like it's generated. It doesn't take long to generate. It didn't turn it into a PDF. You know, AI needs human guidance, right? So mine is asking if I would like it to generate the one-page printable. So I'm going to say yes. Okay, got the one-page printable coming up. That is the thing, about ChatGPT, and I would assume other AI tools, is that we have to teach them to generate and give us what we want. And even after they've been taught, I've been working on it with my ChatGPT for quite a while now. Her name is Grace, and Grace needs to be tightened up, meaning, I have to tell Grace when she's making errors. We'll make errors, and not in the format that I always like. So if your report comes out in a version that you don't like, you can tell your AI to give you a better version. Looks like today's version is okay. We're gonna regenerate it anyway. However, it's good enough to use for the open, and it's good enough to instruct for now. Which brings me to my schedule for today. Today is a full trading day for me. Monday, Wednesdays, and Fridays are full days, except for today at 11:30. I have an occupational medicine appointment. I had surgery last Wednesday, and this is the follow-up. And I'll hopefully be starting physical therapy pretty soon. I'll try to schedule that in the afternoon. But full trading day for me, which means that if anyone is out there, you can ride along or trade along. If not, if you have to tune out, that's okay. If you tune back in, just shoot me a text and I'll pull the live stream back up. Otherwise, I won't be talking to dead air. And I know, we all got stuff to do, right? So let's keep that in mind. I'll keep that in mind, but just send me a text on the private thread on, just me and you, not on the main thread. We don't want to disturb our tribe members that are busy working, okay, or doing whatever they do. We don't want to, the text messaging notification going off all day. All right, so here we go. Let's jump into this thing. Oh, wait a minute. Hold on. Okay, give me a second to look it over real quick. Look it over. I know you may or may not know what you're looking at, but we're about to get into that in just a second. Yep, that looks about right. Dean's letting me know that he generated his smart money roadmap. Yep, that's the way it goes. That's the way it goes, brother. You got your first smart money roadmap. I'm about to start breaking it down right now of what it means. Okay, so SPX. Okay, so we're looking at the SPX. That's so exciting. I'm so excited, bro. Anyway, we're looking at the developing range. What that means is the price has moved between 67.97 and 67.15. So we've got price action going between 6797 and 6715. Okay, 6715. Why is that important? Well, because we are range players. So the Iron Condor is a strategy that is based on ranges. Okay, what is an Iron Condor? Well, that is our trading strategy. That is a strategy we use to make money. That's the strategy we use to place trades. I'll elaborate more on that once we've gotten through market structure. Okay, so we got to get through market structure before we can, start talking about how to place the trades. Okay, it's really important. Market structure applies to all of the market. It applies to every single equity, index fund, ETF, you name it, it applies to it. All right, so there is nothing traded in the stock market. It applies to crypto. It applies to futures. You name it. It applies to everything. So learn market structure, and you can navigate the market. Okay. So anyway, back to the developing range. We have that. We can see that price has moved between 6797 and 6715, with the middle being 6756. Okay, 6756. Just going through this pretty quick. All right. Do I want to draw that line? No, I want to draw the previous day's levels because that's where the liquidity is going to be. That's where the institutions will push the price. Okay, it's not by accident, it's engineered and it is a maneuver. Okay, retail investors do not move the market, especially the SPX. It is an institutional style fund, and the institutions use it, okay, which means that it will be, the probabilities are more obvious. I can honestly say that in theory, I'm not ever surprised by the movement of the SPX. I get in trouble when I try to predict it, but the probabilities are very obvious. And so we work around the probabilities. And as price is moving to those probabilities, that's when we get our 25%. And that's when we get our profits. I mean, the whole idea of the way I trade is to get in and out of the trade. In and out. I don't hold. I stick and move. Float like a butterfly and sting like a bee. All right? Stick and move. I'm telling you that. And I'll keep repeating that so you can remind me of that, because when greed enters into the picture, we blow up accounts, we lose money, and it don't feel good. So we want to get the feel good out of this, right? So stick to those principles, and I'll stick to it too. Making a pact, I'm making it a vow. That's how important it is. So anyway, let's get back to this, Titus. We're looking at the VWAP. Okay, I've been teaching about the VWAP price. It's a magnet. Price will, the VWAP tells us a lot of things. I've talked about it quite a bit, and I'll be talking about it more, but we're going to move past that. For right now, that is our magnetic line. So this is the study I went into. Where did I go? I went into studies. I looked up VWAP, and I applied that line. I turned it pink just so I could see it real good. And I like pink. And so it's a magnet line. So you see how price just sits on it. It gravitates around it. The price likes the VWAP. Uh, it's a value weighted average price line. So that means the institutions, when they are above it and they sell above it, they get premium price. They buy below it, they can buy at a discounted price. And we follow their lead. Okay. We follow their lead. We don't guess. We have probabilities, and we wait for confirmation of price movement, and then we execute our trades. That's how we roll. So we're not gambling. We're not predicting. We are using data to place our trades. We use data. This is the data we use. We use the chart, tells the story, and we use our smart money roadmap to navigate. All right, so I'm talking quite a bit. Let's break this down. I am seeing on my roadmap that there are resistance levels at 6,800, which is the top of our chart, right? So, our range. Oh, okay. Okay, so that is there. This is the top of our range. I think I started drawing that. Okay, so there's the top. Let's find the 6820. Oh, okay. Previous day's range. Previous day high 6845. Previous day low 6715. So it's the 6715. There we go. I got that one bullseye. Okay, so there's our box. All right. So we have our first box. Ideally, we enter at the top of the box or the bottom of the box. However, we can place entries at the VWAP line, which are fast exits, right? Those are definitely scalps when we enter at the VWAP line. We'll talk about acceptance. We'll talk about rejection. We'll talk about reclaim of the VWAP line. There's a lot of action at that VWAP line. That's how we determine the bias of the market. There are two directions that the market can go in. It can be bear or it can be bull. And when price is above the VWAP line, it is bull bias. When it's below the VWAP line, it's bear bias. And that determines the direction of our trades. We do not want to go against the bias of the institutions or the market. We want to go with the bias, not against the bias. Give me just a second here. Okay, let's take a look at what we got going on here. Okay, we got our first box. Okay, so resistance levels, which are the top resistance levels, is where price is subject to bounce down. Like the VWAP in this particular instance, because price appears to be below it, would serve as I'm just looking at the fact that I have two red lines. What is the, I want to get rid of this one. How did that get there? There. Okay, so in this particular case, the VWAP line is above price, so price could be resistance. So there's a ceiling. You see that up there, right? I'm talking about the pink line right here. That is resistance. It's above price. So price could go there and bounce back down. So again, this would be a lesson. If I was in a trade and price was going back towards the VWAP line, I would most likely, in good practice, exit the trade with profit. Okay. That could potentially be my 25 to 30% profit. And that is a great place to exit. So if you're ever wondering from now on, if Coach close the trade, when you see that happening, prices going back towards the VWAP are a support or resistance level that I am not, we can never be confident that, there are certain indicators. Hold on.
Market is mixed, with the S&P 500 down 0.2%, the Nasdaq Composite Index up 0.01%, and the Dow Jones Industrial Average down 0.1%. SPX and SPY update.
Okay, so we got a mixed market today, which brings up a couple thoughts. We had a war going. We've got a whole lot of global, I'll call it activity going right now that's not positive. And you'll notice that the market has been up and down. It has, I would say it's crashed, it's recovered. Why is that? There's always supply and demand. People are always buying and selling. And are they buying stocks and selling stocks? I mean, yes. Why? Because it's company based. Where are these companies going to go? Are they going to fold? No. I mean, these are the top 500 companies in America. So, I mean, if they're folding, if they're going out of existence and their value becomes zero, not likely. I mean, top 500 companies, what do you mean? Like, I mean, Amazon, I mean, Apple, I mean, Nvidia, Tesla, top 500, like legit, Well, people aren't buying Teslas. Well, Tesla is more than just a car, as we're beginning to understand. These companies are just so diverse in their practices, or we're so reliant upon them. Like, what? Our lives won't work without them. So, I mean, Yeah, so when you hear like, oh, the market's crashing, or I'm just not, so much volatility and this, that. Well, the volatility is because we're buying and selling stocks, indexes, and things like that. So, we're just getting a deeper understanding of how this works, right? And it's not so scary. So anyway, I'm coming down off the box and getting back to support levels now. So what your roadmap is talking about in regards to support levels, I look at the bottom more than any. I look at the very top, which was the 6,800 is the top. It's I will always say those zeros. 6,800, 6,850, 6,820. Those are always magnets. I'll show you in just a moment, but price does gravitate to the zero. So whenever that is on your smart money roadmap, pay close attention to the O's, the zeros particularly. Okay, so we're gonna look at the support levels. I look at the lowest support level, which is 6760. 6715 is the lowest. So that's actually the bottom of our box. Okay, so that's cool. So we got just making highlights here. 6715, the bottom, and we don't have it on our chart, but 6845 is at the top. So we've got our support and resistance levels identified. Okay, that's important because price can reverse at any one of those levels. So if we're in a trade and price is approaching, one of those levels, it could bounce, and don't want to be in a bouncy trade today. So definitely sticking to my guns on the 25 to 30%. We just keep stress out of the equation if we just stick to that. No stress. Very little negativity, not much red, mostly green, one of those kind of trades. All right, most importantly is the institutional supply zone. Now, this is where price will go to get supply. All right, 68.10 to 68.35. Definite target, right? And then we've got a lower target, the institutional demand zone. Remember I said it's based on supply and demand. Well, this is the big deal. Because if you notice, it's within the support levels. So the institutional supply zone slides right into the resistance levels, okay, and support levels. So the institutional supply slides into the resistance level, and that's how you can expect price to go there, okay, on the upside. And it is a good probability that once price gets in above 6,800, it will extend and stretch to the third resistance level at 68.45. So those are the upper targets. Okay, and then the institutional demand, which is the lower liquidity or lower target. I'm saying that the institutions always target liquidity. There is always a target. Price does not randomly move. They target, okay, price levels because they know that they have buyers there. They know, and they're able to sell at certain levels. So I'll show you in just a moment, if we can get through this real quick, of how we can see where the supply and demand is also, which helps us gauge our strike placement and trade placement, okay? Institutional demand, let me mark that off. I keep saying it, and now I need to do it. Demand zone is at 67.20, 67.40. 67.20, 67.40. Liquidity targets, 6715, 6800, and 6845. Those are the liquidity targets. Very importante. All right, so what this is saying is that a good strike placement, high probability, A+ setup is going to be 6715 and are placing, 6715 when price gets to the bottom of the box. That is as of now, what the roadmap is saying is that that's going to be our A+ setup when we see a sweep at 6715. That is the lower liquidity target. We enter at the bottom of the trade. We put our puts actually yes. In this particular case, it would be safe to put the puts below the gold line at 6715 and extend the calls up. Okay, we have to be careful that it doesn't do a reversal and continue down. So we'll need like some strong confirmation that it's not going to target lower targets. I'll get into that confirmation after we go through the entire roadmap. But as it stands right now, 6715 would be the first target, and then price would head towards 6,800 and then continue on to 6845. The average range of SPX is about 85 points. We've seen it go as high as 100, but on average it's 85. So it can take off and then, and do 85 points and then return to 45 points. It'll do a turnaround 45 points. So, to someone that's just looking at it, it looks like it only moved 45 points, but in the intraday, which is regular trading hours, it actually moved 85 points and retraced 45 points. So just keeping that in mind, that is, something that, you just want to keep in mind. Like, oh, it can move 85 points in one direction, but on average, it moves 45. How do I know? Because I track this beast. So what else is important? Clusters. So we got a cluster center, which is like where it chops. And so you see how it goes sideways? Well, we've got a cluster center at 67.75 through 6,800. And that means that price is going to go sideways. It's going to stay in that range. So here we go. Q1 roadmap is range discovery. We should see some price movement between 67.60 and 6,800. Okay. Q2, we're potentially looking at a bull bias 6780, 6720, 6845. I'm sorry, let me start over. A bull bias 6780, 6820, 6845. Okay, now there could be a bear bias, in which case it would go 6780, 6735, 6715. So you're like, well, the price could go either way. Like, how do we know? Well, we just wait and see. Like I said, we're not predicting. We're looking at probabilities, and then we're waiting for confirmation. Okay, we'll get our confirmation. It starts with the VWAP line that tells us the trend. So we just want to get like two 5-minute closes underneath the VWAP line. Bear red candles, big red candles underneath the VWAP line. Takes about 10 minutes to get the confirmation once it starts moving. And that means that price is headed towards a lower target. Okay. On the flip side of that, price on top of the VWAP line, what that means, we look for 2 5-minute closes of a green candle. Then we actually even look for a retest, okay, when it's above, because it could be a fake, it could be a trap, because traders chase trades. Traders chase trades. Try saying that 5 times. So when price starts to go up, traders like, oh, it's going up. Let's trade. Let's get in the trade. And the institutions know that. They play on emotions, right? We'll get into the psychology of the emotions once we get through, all the trading psychology. Once we get through the structure, there's a psychology side that supports the structure. But anyway, this right here on the screen is a retest. So price is up, boom, boom, boom. It comes back down, and then it goes back up. That is a retest. But back here, this is a pretty solid confirmation. Price is sitting on the VWAP line. You see the big green candle, and then you see another 5-minute candle close. That is confirmation that we are in a bear bias. Price goes up, comes back down, retest. So as it's going up like that, and then it goes sideways like that, that's about 25%. I mean, that's what it looks like. And then, it goes back to the VWAP. That's a good time to exit the trade. So anyway, that's how we determine a bull bias. Okay, so with that being said, we'll Q3 11 to let's see. we'll see some dealer stabilization, 6750 through 6800 start stabilizing again. And then the closed magnet, 6780, 6800, 6760. So again, all those zeros. So chop zone 6770, 6790, VWAP gamma compression. So that means that price is going to close around the VWAP, but it does move throughout the day. There's some recommendations for the condor strikes. We take those lightly. 6830, 6850 strike for the call side, put side 6700, 6715, with the center being 6780. I take those lightly. We can come up with better strike placement than that. So with that being said, it is 6:16. We've got time for, oh, wait, not that. I want to show you, I want to go trade. Where's the chain? I'm going to take you to the option chain. Options. Okay, there we go. Okay, so what I'm doing is you look at the chart, open interest. What we're going to do is we're going to look at the open interest and we're going to find the highest number of contracts, okay? 6,800, I see 54,320 contracts, okay? That's, look at that, 2,000, 3,000, 5,000, 3,000. Look at that, 54,000. So price is definitely going there based on the number of contracts that are sitting there. That's a lot. Look at that. Nothing else even comes close on the puts. So let's take a look at the calls. Where are all the contracts? 53,000 on the call side. Look at that. So price is definitely going there. You best believe it. Let me change this for us. Let me see if that changes the situation. SPXW settled. Let's see, 6,800. Oh, that changed the situation a little bit when we went to the SPXW, which trades every day. So with that being said, we're still going to look for the highest number of contracts on the put side. Looking at 22, 24. Oh, I'm not getting enough strikes. Okay, well, I just wanted to point out that we need to take a look at open interest. And so what that means is we definitely don't want to place our trade at 6,800 because there's going to be a lot of business going on right there that we want to avoid. So we would place the trade beyond 6,800 for a safe distance. Or, I mean, we know price is going there, so we could position our trade to get our 25, 30% and exit the trade before it even gets to 6,800. So with that being said, we're going to take a look at the call side. And we're going to see where most of the contracts for the calls are. Again, looks like 6,800 with 1929. So, yeah, it's going down at 6,800. There's a lot of contracts sitting there. So that means a lot of liquidity, a lot of money. All right. What else I wanted to show you was, let's see if I can do this real quick, and then we'll pause for a break before the market opens. We'll let it do do its volatility dance. Yeah, so I figured I can show you bar chart.com. Uh-oh. Sorry, I'm not using my keyboard, and I don't see the period, guys. So let's see if it'll just do it for me. Oh, not cart. Oh, whoops. I don't know about this. Why isn't this working? Oh, okay. Oh. Nope. Okay, it's definitely easier to do from my phone. I'll try one more time. Oh, I spelled it wrong. Whoops. I know you're probably laughing. Well, why can't I get a period then? Why is it so hard to get a period? I don't know. Oh, there it is anyway. Market data news, trading tools. Aha, there it is. SPX. SPX 500. Go away. All these ads. So many ads. But it's free, so that's why I deal with it. Oh, don't get dizzy on me. Hold on, I'm getting dizzy. I got the data coming. It's coming. Fuel. Nope. Here it is. Nope. Looking for key points. Oh, there it is. Key turning points over to the right. Right over here. Okay, so that's what we want to write down. So we use this as backup. So third, second, first resistance levels. So now we've got 6716, 6880, 6831. And then 1, 2, 3 support levels. We have 6745, 6710, 6660. Okay, so we've got, some additional reference points to consider when placing our trades. They're backups. So sometimes we need to know what's underneath our report. Our report didn't do a deep enough dive. Sometimes, not often, but on occasion. And so now we have a second resource that we can use to determine how high price could potentially go or how low price could potentially go. So with that being said, we are going to take a break and have some coffee and let the market open. Come back at about 6:15. We don't make any trades. 6:15, 6:45. We don't make early trades. So we give it at least 15 minutes to let all the volatility kind of settle down and then get a good indicator of what the accuracy of our smart money roadmap. We've done a very thorough analysis thus far. However, things are subject to change. So at that point, we generate a new smart money roadmap, just as we did the first one, and we
No early
continue to
trades.
we continue our technical analysis. So this becomes our thesis, and when we see our thesis is not valid, we formulate a new thesis, and it will be valid until it's not. Okay, that's the thing, is we always check our thesis for to confirm that it's valid. Okay, we want to make sure it has validity, and when it stops, we generate a new thesis. So that's generally the way it works. Okie dokie. So with that being said, we're going to take a break until about 6:45.